What's up, everybody? Welcome to the Stocks channel. My name is Cory, and tonight's episode is going to be your daily stock market technical analysis update. We can still see the S&P 500 is near a very critical resistance level, and we're failing to break out from where we are right now. So will this critical resistance level keep the S&P 500 from going higher? Or are we going to finally break above this resistance level and form a new bull market? We'll try to answer that question in tonight's episode, but before we get into the charts, please help me out by smashing that like button. And if you're new, go ahead and smash that subscribe button so you can follow along with all of my daily updates. First up, we're going to take a look at the S&P 500 SPX, and we're going to take a look at these resistance trend lines. So let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, so the first thing you need to know is the purple resistance trend line is taking the high from 1987 and the high from 2000. Those are the only 2 points that form this trend line, and I've just extended it here on this chart. The next resistance line is this magenta trend line, and this one takes the low of 2009 and the high of 2018 in January. Now, the one thing you'll note about these resistance trend lines is they've been very important in calling market tops in the S&P 500. You can see that both the purple and the magenta trend line come right through recent price action that we've had in 2020. So the first thing I wanted to show you on a macro level view is how these resistance trend lines were generated and where they originated from. The next thing I want to do is go ahead and zoom in here, and this is still looking at a monthly chart. And you could see going all the way back to February of 2020 that magenta trend line perfectly called the high that we had before the stock market crash. Now, the purple trend line was just a little bit higher, but the purple trend line did a good job coming in here in August and then again in November and calling the recent tops in those months. You can see that these two trend lines get very close to coinciding in this recent price action history, and you can see that the price action is really struggling to break above these resistance trend lines. So are they calling an important market top, or are we about to break through them and start another bull market? So if we switch this over to a daily chart, you can see this a little better, and you can see that we did break above both of these resistance trend lines on September 2nd of 2020, but it was a false breakout and it was followed by a steep correction in the month of September. We came back up to the purple trend line in October, and we had another steep correction after getting rejected from that resistance trend line. Now we're trading back up just above the purple trend line and still getting rejected below the magenta trend line. So you can see how these resistance trend lines are very critical resistance levels for the S&P 500, and that's why we're going to watch them very closely while the S&P 500 is trading up in these price action levels. So now that you've seen how those resistance trend lines are formed and how they're keeping the S&P 500, we're going to go ahead and jump into the S&P 500 SPY ETF. And if you enjoyed seeing how these trend lines were formed, go ahead and let me know by smashing that like button on this video right now. Alright, so here we are in our SPY ETF daily chart, and we see the price action still closing just below that purple trend line and also right around our 0.236 Fibonacci retracement level at that $354 level. We're still holding up to a daily higher high on the chart just above this 352.5 level. And we did close slightly in the red today, but mostly we just closed the day flat right around this purple resistance, critical resistance level. So we can definitely see bullish price action and bullish trending on the S&P 500, and we see how the price action is still trading well above that 5 EMA. That 5 EMA is still basically going up in a straight line, and we're getting that extreme bullish price action ever since the election was over. We see an upward sloping 50 EMA and an upward sloping 20 simple moving average. And we also have that strong short-term bull trend from that 5 EMA trading well above the 13 EMA. So the bullish price action and the bullish trending are showing us that we're likely to continue to go higher in this market, but we are getting a little far extended, and it could be time for a pullback before we continue to head higher. So to answer the question posed in the beginning of the video, are we going to finally break above these resistance trend lines? I think this could actually finally be the time that we break these levels. Now, the most likely scenario we're going to have is we did break out of this consolidation wedge pattern, and we're likely going to come down here for a wave 2 at least to a 0.382 Fibonacci retracement, which also coincides with the support level of this wedge where we did have a breakout. So this level could act as a support right around SPY levels of 348, and then we could start coming back up and forming a wave 3, which should send us well through these resistance levels, and we should start closing higher. Now, once we get above these resistance trend lines, we will be waiting for a retest of them as support and look for that confirmation bounce so that we know it's not a false breakout. Anytime you try to trade a breakout on the stock market, you always want to wait for that confirmation bounce, which lets you know that it's not a false breakout. If you start trading breakouts just because we broke through a resistance level, you could get into a scenario like we had back here in September where we broke above these resistance levels only to see a huge bearish engulfing day the next day. So a true break of resistance, we would have seen the test of that level as support because it was previous resistance, and we would have bounced and then started heading higher. This will increase your probability that you're not getting caught in bull traps, and you can always set your stop loss after the bounce below that support level. So this is the safest way to trade a breakout, and if you're trading breakouts just on the first day they break out, you're increasing your risk because you're literally buying at the top before there could be a huge correction. So right now we're trading right around our critical resistance levels on the S&P 500, and it could be finally time that we get that bounce off of support and start heading higher and finally start breaking through that level. So only time will tell if this scenario is going to play out, but it does look like this level has been tested many times this year, and it looks like the market is trying to finally break out above this level because here we are again for the third time in a matter of a few months testing this resistance level yet again. So as you've seen from the beginning of the video, these resistance trend lines were generated over decades, and they're not trend lines that typically get tested this many times. So there's definitely something going on in the S&P 500 that is increasing the bullish odds that we're gonna finally break through these levels. So as you know, if you're a follower of the stocks channel, we are long-term bullish, and we've already made a video explaining how the trend is bullish on the weekly and monthly moving averages. So if we have that macro level bullish view and we're starting to get this micro level bullish view on the daily chart, it's likely that we're finally going to break through these levels. Now anything is possible, and there's still a chance that we get rejected from these resistance levels yet again and start heading lower. But right now we're not giving benefit of the doubt to the bears because we have a strong bullish price action and a strong bullish trend. So as long as we have bullish price action and bullish trending, we're not going to look at the bear cases because it's very unlikely we're going to see bearish price action and bearish trending when we're in this strong of a bullish trend with this strong of bullish price action. So as you know, we are still expecting the possibility for a pullback and a test of support before we bounce and start into this break of this resistance level. But it's likely coming soon, and the market is looking very bullish all around, which we will get into in tonight's episode. Now there is the chance we don't have to bounce off the 0.382 Fibonacci retracement, and we could still come down to the 0.5 or the 0.618. Don't forget we have this gap down at 338, and we could come as low as this level and still keep forming daily higher lows and daily higher highs, which is still a bullish trend. So it's possible we come all the way down and close the gap at 338 and still find support and get a bounce, and then we can start heading higher for another attempt at breaking these resistance levels. This is still a bullish setup on the daily chart, and there's nothing that would cause this chart to fall apart if this scenario played out the way shown here. So right now we just want to be patient, and we're looking for opportunities to accumulate a long-term position on these support levels. If we truly are about to break these resistance levels, this could be a very critical moment in the stock market, and we could be going into another long bull market, and we're just seeing the beginning of it. So next up, let's go ahead and take a look at the Nasdaq 100 QQQ ETF, and we see the Nasdaq 100 is actually getting that pullback that we expected, even though the S&P 500 is not seeing it yet. We did come all the way down to the 0.5 Fibonacci retracement, and at one point we came all the way down to the top of this gap at 280, which is just above the 0.618 Fibonacci retracement at 279. So the Nasdaq 100 is definitely getting that wave 2 pullback, and this could be a time to start accumulating a long-term position. Because if the S&P 500 is about to break out and we are going to new all-time highs, the Nasdaq 100 is likely going to follow suit. So in the Nasdaq 100, we still have gaps that won't close until price targets of 276. But we do look like we're finding support right around that 50 EMA and the 0.618 Fibonacci retracement around the $279 level. So these could be great buying opportunities, and I'm personally using this as a time to start accumulating a long position. In case we do start going into that long-term bull market, we'll have a long-term position that we can hold for years to come. Remember, it's very possible that after a long-term bull market, we could get this ABC correction and then a continuation of that long-term bull market. So there's no reason to be bearish on this market because we still have bullish price action and bullish trending. And if we zoom in here on the triple Qs, you can see that the price action did close above the 20 simple moving average today, and the 5 EMA is still trading above the 13 EMA. So all the moving averages are still stacked to the bull side, and we still have bullish trending and bullish price action. So we're in a bull market. We want to be buyers of the dip, and we don't want to try to be shorting right now. We're just looking for opportunities to buy and accumulate. We also have this consolidation wedge forming on the Nasdaq 100, And if we do come all the way back down to the bottom of this wedge and bounce, that could be the last support level we need to finally break out of this wedge to the bull side. Now it looks like we did get a small breakout here, but it was a false breakout because we never got that test and support bounce that I was talking about earlier in the video. Remember, these false breakouts get a lot of bulls trapped, and that's why they're called bull traps. They're designed to look like the market wants to break out, but as you can tell, if you don't wait for that confirmation bounce off of that resistance level to act as support, you can get trapped and the price action could head much lower. So a disciplined trader doesn't chase breakouts, they wait for the confirmation test of resistance as support, and then they buy in on the bounce and they can set their stop loss below that support level. You're going to be much more successful if you wait for the confirmation of the breakout and then buy. It'll take a few more days, but that discipline will pay off in your portfolio. Next up is the Dow Jones Industrial DIA ETF, and we see the Dow Jones looking bullish today, being the only indice closing up in the green. Between the Nasdaq 100 and the S&P 500, the Dow Jones closed up in the green, even though the other two closed in the red. On the Dow, we still see a huge gap below, which won't close till a price target of 284. Now a test of the breakout on the Dow would take us somewhere around the 0.382 Fibonacci retracement level at 285, and then we could see a bounce from there. So if we were to completely close that gap and get to the Fibonacci retracement level, that would bring us out to the end of the month. So is it possible that the market starts kind of trading sideways before we finally get down there and then bounce? Or are we going to get down there in a flash and go ahead and close that gap fast and then start bouncing and trying to break to new all-time highs? Only time will tell, and anything is possible in the stock market, but just know that we have bullish price action and bullish trending, so these are all dip buying opportunities to go long. There's no reason to be bearish on this market right now, and if you're trying to short, good luck because this market can go much higher. Next up is the VIX, which is our fear indicator, and we see the VIX going down today even though the market was pretty flat. So fear is still leaving this market, and as long as the VIX keeps heading lower, we're likely going to continue to grind higher on the stock market and see new all-time highs. So the VIX is telling us that there's no signs of fear because fear is leaving this market, and the only way we're going to see fear back in this market is if the VIX starts bouncing soon. Because right now we're near all-time highs and there's still not fear entering this market. So if there was ever a time to be fearful in this market, it's going to be at all-time highs when people are afraid of a rug pull and a huge downward move. But as you can tell from the VIX, there's not a lot of fear and we're likely to see the stock market continue to go higher. That doesn't mean we can't get a dip before we head higher, but the VIX is telling us not to expect a ton of volatility at this point in time. Next up is Apple stock, and we see Apple still trading below our resistance trend line, again with a false breakout, and we are still being suppressed below that resistance level. The price action did close above the 20 simple moving average today, so we're still maintaining bullish price action and we still have the benefit of that short-term bullish trend. So it looks like Apple did find support at the 50 EMA intraday today, and we did get a bounce and close higher. So it's likely Apple's building a base for the bulls and we could break out of this resistance level and start heading higher soon. Now remember, Apple is a market moving stock, so if Apple starts heading higher, we're likely going to see the entire stock market go with it. Now if Apple does break down below the 50 EMA, we're likely going to close this gap down here at $111. Next up is Tesla stock, and Tesla was actually looking pretty bearish today while it was trading below the 50 EMA. Tesla did hold up around the 50 EMA a couple weeks ago, and today it looks like it's testing the 50 EMA yet again. So it's not the most bullish setup, repeatedly testing the 50 EMA, and it looks like the Tesla bulls are on vacation and the bears are starting to take over. If the Tesla bears can close Tesla below the 50 EMA, we're likely to see this downtrend continue. We can see the 5 EMA is starting to roll over and cross below the 13 EMA, and the price action is still trading below the 20 simple moving average. The 20 simple moving average is flat and it looks like it could be trending downward, which is not bullish news for Tesla. The Tesla bulls would have to take the price action back above the 20 simple moving average and get this 5 EMA trending above all the other moving averages. So right now the Tesla bulls have some work to do if they're trying to drive Tesla higher, and if Tesla keeps heading lower, we could possibly find support at $363. Next up is Boeing stock, because I know a lot of you are wondering about Boeing right now, and we did get a bullish breakout on Boeing after a long bear market. So we know Boeing is breaking out because we finally got a price action close above the 200 simple moving average. If I zoom out here, you can see that Boeing has been in a long-term bear market, and we've been trading under the 200 simple moving average ever since December of 2019. So this is huge news for Boeing, and we're likely going to see a lot of bulls flooding into Boeing now that we've finally broken above that level. Now remember, we don't chase and we don't FOMO here at the Stocks channel, so to get in on Boeing, we would want to wait for this 200 simple moving average to act as support. Remember, this could be a false breakout and it could be a bull trap. While that's not likely, it is still a possibility. So ideally on Boeing, if you're looking for an entry and you're not already in because you weren't buying down here, you're now wanting to wait for a test of the 200 simple moving average, act as support and wait for that bounce, and then it would be a good buying opportunity to jump in on Boeing, and you could still set a stop loss below the 200 simple moving average. Waiting for this scenario and test of support for a bounce is going to give you a much better entry than trying to chase something that's already starting to break out. If this is indeed a false breakout, we could easily start heading lower and go all the way back to the 20 simple moving average before finding support and heading higher. So be patient and wait for that test of the 200 simple moving average on Boeing if you're looking to get long. Next up is gold, and we do see gold holding up at the 1860 support level, and we did get that confirmation bounce today. So like I said before, this could be a test of support and a bounce, and this could be a good entry on gold to set your stop loss below support and get ready to go long for the next bull market. Now we still have to come up here and break back above 1930, and ideally on gold, we've been failing to test 1930 as support and break higher. So we can see right here, we had one of those false breakouts where we broke out above resistance but failed to test resistance as support. So ideally here, you would have took the trade off the test of support and the bounce, and you would have never actually entered that trade because that support level did not hold up, which would have saved you a lot of downside where we came all the way back to the previous support level. So on gold, we are getting another bounce off 1860, and we're looking for another test of resistance at 1930. So it could be a good time to start accumulating gold as long as that 1860 support levels continue to hold up. Similar story on silver. We had that breakout, but that failed test of support, and we never got that bounce. So right now, silver's holding up somewhere around the support trend line, and it could be possible that silver is not actually going back to its previous support level, and it's gonna find support off of a support trend line. So silver's looking pretty good, and if silver can get a bounce, a break of resistance, and a test of that resistance as support and a bounce, this is your entry you're looking for on silver. That would be a break above that $25 level. We see the US dollar is still downward trending. It still has bearish price action and bearish trending. Even though it did bounce off support, it's still failing to break back above the 5 EMA. So overall, the dollar is looking bearish, and it looks like it's going to continue to head lower. And a weak dollar is bullish for the stock market and bullish for assets like gold. Next up is Bitcoin, and Bitcoin's still looking extremely bullish because we continue to get price action closes above that 5 EMA, and all of these moving averages are stacked to a very strong bullish uptrend. So right now, we maintain our price target on Bitcoin at $17,000. And it looks like after Bitcoin finishes this consolidation, we could get a breakout and a next leg higher to get to that price target quickly. Don't forget, when something's consolidating, it's also possible that it breaks to the downside. So don't get overly confident, but it is a consolidation, and it is likely that if it's a bullish consolidation, we're gonna head higher soon. Let's take a quick look at the sectors, and we see the financials has bullish price action and bullish trending, which is great news for the S&P 500 to continue to head higher. Jumping over to the industrials, we also see bullish price action and strong bullish trending, which is also great news for the S&P 500. Over here at healthcare, we see bullish price action and bullish trending, so we see all of the sectors looking bullish except for the tech sector. So as soon as the Nasdaq 100 and technology start heading higher, it's likely that we're finally going to see the S&P 500 close at new all-time highs. We have bullish price action and bullish trending all around in the stock market, and this really just looks like a tech sector rotation into some other industries right now. So be patient, and this could be a great opportunity to start buying tech while it's in the dip. So going back to the S&P 500, you can see that we're long-term bullish on the stock market, and all of the sectors are showing signs of bullish price action and bullish trending. It's likely that after this tech dip is over, we're going to see the S&P 500 finally start breaking back above all these resistance trend lines, and we could start into another long-term bull market. I know that's hard for a lot of you bears to fathom, especially with everything that's going on in the world right now, but we're following the technicals and we're not being biased. We're looking at the price action and we're looking at the trends, and everything is pointing to bullish right now. So don't forget, if you're looking for opportunities to trade this market, we have the Stocks Channel Discord, and you can find the link in the description below on how you can join. Also, please remember to help me out by smashing that like button, and if you're new, go ahead and smash that subscribe button so you can follow along with all of my daily updates. Thanks for watching, everybody. Good luck out there, and as always, I will see you in the next episode.